We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelming on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Daniel Earle, President and CEO of Solaris Resources and a Director of the Augusta Group. Thanks for joining me today, Daniel.
Thanks for having me. I'm excited to be here.
Excellent to have you a new guest here. So why don't you give our audience a little bit of perspective on what has led you to become the CEO of Solaris and kind of a bit of your background. What's led you to this point?
Well, I mean, just an incredible opportunity. I mean, so it's not just a job for me. I've actually invested my life savings in this company. So it's, yeah, I mean, I guess I'll start with the background on myself. I'm a mining engineer by education. So I went to I graduated from the Lassonde Mineral Engineering Program at the University of Toronto. And this was a program that was founded by Pierre Lassonde, who's, a famous mining entrepreneur, the founder of Franco-Nevada, which is, one of the largest royalty companies now in the sector. And so I basically started out with, technical knowledge. That's my background: mining engineering, mineral exploration, et cetera. And I worked in industry for a period, basically doing exploration work for junior mining companies, and then transition to the capital market side of the business. So the last dozen years or so before Solaris, I worked as an equity research analyst covering the mining sector at a major bank. And at the bank, I basically took that technical skill set and then added to it, financial analysis and company and project valuation skills, and then, market analysis and commodity forecasting, economics, and kind of all the rest of rounding out that kind of picture. And so that's that's the skill set that I have. And so it's natural that I take that skill set and then apply it to kind of my approach to looking at companies and opportunities. So it's a bottom up approach and very project focused. And basically what I'm always looking for, and this is the same in the way that I approach Solaris as it was in, approaching candidates for research coverage when I was a publishing equity research analyst and on the sell side of the capital markets, is I'm always kind of looking for a core project or a nucleus of a project, part of a project, which is basically on day one an economic project. And something that you can hang your hat on from a valuation perspective, sort of downside protection, if you will. And then what I'm looking for is world-class growth potential around that. Okay, so you've got that downside protection, but then you've got the tremendous upside potential, 10 times upside potential with the unveiling and unfolding and growth and evolution of one of these, truly world-class mineral projects. And if you can take those things and then combine them with, a strong team, this is in terms of the management team of the company and a tight structure, and then maybe get the timing right in terms of, landing this or introducing this into the market at the beginning of a commodity cycle, then you've got something that's really special. I mean, now you're talking about, instead of just a world-class opportunity, but a truly generational one. That's what you're looking for. And if you're fortunate enough to see one of those, then you've got to, of course, recognize it. You've got to make the correct call, but then you've got to take advantage of it. You've got to go all in. And you don't get many of these opportunities in your life. And I was fortunate, obviously, to do so with Solaris, in my opinion.
So if you have let's say the experience of looking at the mining sector as a whole, Dan, what made you choose, let's say, copper and Solaris? Is it just simply because of the deposit, as you were mentioning?
Yeah, it's the deposit. So I started looking out at the deposit, and in this case, you had basically kind of that core nucleus of deposit in the historical resource estimate that would basically get you to the threshold of an economic project, and then you could see the growth potential around that. So it was the project, but copper as well. We're at a period in this copper price cycle where we've essentially completed the first leg of the copper price cycle. So coming off the pandemic or the cycle lows, set during the kind of peak of the pandemic, market dislocation back in March of last year. The copper price is basically, more than doubled and then corrected a little bit. Okay, and this is a very normal. I mean, it seems like a big move, like a rapid move, but this is actually pretty normal for a copper price cycle. So if you consider the perspective that's provided by like the prior two cycles, let's say, then you would have seen a similar thing with the copper price basically doubling in 1 year and then going on over the next couple of years to double again. So you get a quadrupling across a normal copper price cycle. So you would have seen that, in the mid 2000 cycle, for example, copper went from about $1 at the start of the cycle to a peak price of about $4 a pound in 2007. So that was in less than 3 years. That was a cycle that was dominated by basically urbanization and the opening and rapid economic growth in the Chinese market. And then in the more recent cycle, so this is in the post GFC cycle, you had the copper price bottom during that market dislocation at about it was kind of $1.25 or so, in late 2008, and then it rallied all the way to 464 in early 2011. So in a little over 2 to 3 years basically across that cycle to set the peak price. So those are the kind of returns that you're looking for in in a normal copper price cycle. But I think everyone can see that this cycle is going to be much more powerful than those prior cycles, because you've got basically the same makings in terms of economic cycle, but then overlaid on that, you've got massive stimulus, which is being directed not at the financial sector as you had in the post GFC cycle, but directed into the real economy, the hard economy, infrastructure, and so on. So that number one, and then number two, you've got the green revolution superimposed on top of all of this. So this is electrification and decarbonization. These are megatrends that are going to run for decades out in the future. And very copper intensive, all of these technologies, and of course these are only intensifying over time. You see with every new policy announcement and so on. So this is when you put all of this together, you've got in copper the makings of a super cycle instead of just an ordinary price cycle. So that's something I think that is pretty special as well.
I'd like to touch on maybe a bit more of the supply-demand picture here, and what is different this time. I've heard you say that before, that high prices are the cure for high prices, i.e., high prices will bring out additional supply. So why is that part different in this cycle?
Yeah, no, the supply side is really important. But if you look at the supply response in the prior cycles, then think about how this cycle is going to be different, then you can see that this is going to be make for a delayed and a kind of ultimately smaller response across this cycle. And so basically, what in those prior cycles, if you looked at them, those cycles were dominated by the mega mines of the industry. So something like across the top 10 mines in the copper industry, you accounted for 25% of supply, and then what happened in those cycles of the price response is that the gap that was evident between supply and demand was ultimately filled in by expansions at these mega mines. Some of them were expanded multiple times, like Serra Verde, for example, was expanded 3 times, to become one of the biggest, or an already big mine to become, one of the truly largest mines in the world. And these mines, if you look at them individually, collectively, they're all now running up against the constraints of the physical size of the deposit. So you're facing now resource depletion. Resource depletion alone would be something like 2 million tons per annum of supply, which is going to come out of this kind of top 10 across this cycle. Grade declines at these mines. So having mined all the high grade during the low copper price years or in the prior price cycles, now they're facing, for the residual part of their reserves and resources, they're facing lower grades. This is another 2 million tons per annum of supply that's getting removed across this cycle. 4 million tons of supply between those two factors. That's like equivalent to another 40 mines that the industry has to bring on, normal sized mines, given the scale of these large mines. And then a variety of other things, water constraints in Chile, and increased input costs, and all this sort of stuff. So you just don't have the ability to go back to these mega mines to find the solution for the kind of shortages that we've got in this cycle. So you've got to look at greenfield sources for new supply. You've got to look at new mines coming on. You've got to look at new jurisdictions, I think, as well, given some of the political developments.
So exactly all those factors that you just mentioned, Dan, does that mean that we've basically hit peak copper?
Not quite yet. If you look at the existing supply profile, peak copper lands around the middle of this decade, maybe 2024, maybe 2025. So that would basically, if you look at the existing production, the planned production, so sanctioned projects, and then possible production, then that would land around 2024, maybe 2025. Okay, and then from there, the production that's committed starts to roll off, and that's when the gap really starts to open up to demand, which is accelerating, which is growing and then accelerating as you get. So growing through at a steady pace through to the middle of the decade, and then accelerating from there when greed demand really starts to take off exponentially.
So, Dan, considering that, as you're saying, that peak copper price, peak copper production is coming near the middle of the decade, and as we know, there's a lot of, let's say, car manufacturers that are moving towards all electric by 2030. Does that, in your mind, point towards a much longer and healthier copper cycle than in the past?
Yeah, absolutely. So I think even just if you just look at the demand side, for example, and you just imagine kind of like a normal demand profile, and then think about what's going to be different in this cycle. This is basically what's different. Let's set aside the discussion on kind of all the stimulus and lower interest rates, lower cost of capital, and that kind of influence. If you just focus on the super cycles of decarbonization and electrification, I mean, this is already 1 million tons per annum of demand, and it grows. So even though it's growing at a rapid rate, it's off a low base. So we don't get to 2.5 million tons per annum until we get to the middle of this decade. Okay, so that's about 15% demand growth for the sector as a whole. But then you continue this exponential growth, but off a higher base, and it really starts to open up the gap between supply and demand. So as we get towards the end of the decade, you're talking about 8 million tons of demand from these kind of green uses, 25% growth for the sector. And to put that in perspective and frame it for you in the context of prior cycles, if you think back to the China cycle that we saw in the mid 2000s cycle through the kind of post GFC cycle, you had a basically equivalent sort of volume growth in this green channel to what you experienced through the kind of the China cycle, and so that's the kind of magnitude that we're talking about. And investors will be familiar with the kind of price growth and impact on markets and M&A and so on that China essentially delivered. But here, what we're talking about is a more balanced geographic distribution. So it's not just a China story anymore. The way that the demand explosions were in those prior cycles. Here, with green demand, we're talking about a truly global thematic, where China itself probably, although China is trying to implement policy to provide kind of leadership in these sectors, it still only accounts for about 1/3 of that overall growth. Where you've got the balance of kind of 1/3 each from the United States and then the Eurozone. So it's a much more balanced kind of demand profile that we're going to see across this cycle.
So if we think about real rising copper prices, Dan, where do we hit a possible substitute where companies are going to start trying to substitute something else for copper?
Yeah, well, I mean, if you just go back to the supply side, I mean that's substitution's part of it, and then the price. You asked earlier about the price response. or the supply response that we get from the elevated prices that we already have and the prices that are forecast into the future. Substitution itself really doesn't become a factor until we get into double-digit copper prices. And so that we're not expecting to see double-digit copper prices, like i.e., $10 a pound and above, until we get, much later into the cycle, towards the end of the decade, when we've got really large gap between supply and demand. So substitution is a very long way off. In terms of a supply response, it's constrained, as I said. The chairman of Freeport-McMoRan was asked this question in an interview a few weeks ago, and he said, "Look, if the copper price were to double tomorrow, it wouldn't allow us to bring on any production growth any sooner than we've already forecast. So we can't bring forward production the way that we would in prior cycles." And this is basically a function of the new, regulatory framework and ESG framework that the mining industry, operates in, where the lead times for these projects, instead of in a normal scenario where lead time for one of these major copper investments would be, and we're talking about multi-billion-dollar investments to bring these large mines on, a normal time frame would be 10 years. Now it's being stretched out by all of these issues, to 12 years and 15 years and beyond. So the supply response, although it will eventually come, it's going to be delayed relative to what it would be in prior cycles.
So you mentioned China earlier, and I'd like to get your thoughts on how big of a player they will be in the demand picture going forward here.
Well, China absolutely dominates the market. So China is already both the in the near term, and then I think to an even greater degree into the future. So China right now represents about half of the demand side, and then if you look at basically the policy positions which Xi Jinping has articulated to set the course of China's economic direction, then you can see that copper growth is going to be at the center of all of this. And so these are in particular the two important policy planks to look at are peak emissions. They want to achieve peak emissions by 2030 and then declining thereafter, and then full carbon neutrality by 2060. And so to do this, they've essentially got a strategy of electrifying everything, from transportation, where they want to dominate the EV sector, to residential, industrial, installing renewables, smart grids, grid storage, transmission lines, and so on. All of these things. You're talking about electricity becoming the main energy source for the entire economy of China, and so they'd be running something like 26% dependency right now. And then this would be increasing rapidly out to 35% by the end of this decade, and then eventually 60% by the time you get to the middle of the century. And the scale of funding that we're talking about here, it absolutely boggles the mind. I mean, you're talking about China investing $200 to $300 billion a year for the next 30 years in all of these various technologies. So trillions of dollars of investment collectively, and copper is wiring all of this together. All of these technologies are incredibly copper intensive because of its electrical and transmission properties. So China already dominates the market, but you're going to see that actually grow out into the future. And if you need any further evidence of this, look at what recently happened in the copper market. We had a very orderly kind of price trend established with, basically from the pandemic lows, the cycle lows in March of last year, all the way through to about April. You just had this steady trend higher in copper prices. And then around mid-May, of course, it started going, parabolic. And then immediately you saw a response, from China to come in and tamp this down. So they started with kind of jawboning prices and so on in the press, then started threatening to release metal from strategic stockpiles. And their strategic stockpiles are, you're talking about less than 1 million tons in total, and possibly closer to half of that. So these are sort of symbolic, but that direction from China and the state regulator, for example, which regulates all these state-owned enterprises that control mining, smelting, trading, and so on in China. The state regulator saying that they were going to tamp down on speculative positions, basically delivered an unwind of long positions, so speculative long positions in the market. And so effectively what China did is they engineered a positioning shakeout in the copper price. And so you saw the copper back off from, record highs above 480 a pound, quickly down to 420 or so, or actually even a bit below, just on China essentially becoming unhappy with copper prices. That gives you an idea about how significant they are in this market.
Mm-hmm. Yeah, that was actually something that I wanted to ask you about here. I read an article last week that they were stating that they were going to release more base metals from its state reserve. So I wanted to get your thoughts. This is basically, probably a short-term move that is just kind of signaling to the market that they want to control the price, but ultimately it's probably not going to be effective, right?
Oh, absolutely. I think it's inherently unsustainable. I mean, the types of volumes that they're talking about, or that they are now actually releasing, are essentially, immaterial to the market. I think that's why you've seen copper prices firm up a little bit more, now having seen the actual response, how the rhetoric has transitioned into an actual response, which isn't, particularly impactful. So, it's inherently unsustainable. I think if anything, if you're a longer term investor, you take this as a bullish sign, because I think it speaks to the sensitivity around copper, and just how sensitive the Chinese are to copper prices getting away from them. And the other thing, which is important for, if you're looking at equities and, in companies and you're trying to run these businesses and plan for the market that you have, is to think about what it means for M&A. Now, having engineered a price correction, do the Chinese SOEs, the state-owned enterprises that are trying to dominate the kind of securing copper supplies globally and growth for the future, do they go out and do we see the start of an M&A cycle? Certainly in the prior M&A cycles, the Chinese have been the most aggressive bidders. Let's see, that'll be important for investors.
And this also speaks to the, let's say, the strategic importance of copper, maybe the geopolitical strategic importance of it, correct?
Yeah, well, absolutely. Like I think we wouldn't say today that copper is is considered a strategic metal. So certainly among investors, it's not, and really you haven't seen a lot of rhetoric out of governments around copper supplies. That discussion is confined to some of these battery metals, and before the battery metals, the rare earth space is where you saw that kind of discussion. And then of course, investors take that discussion and then they apply it in the market, and you see it reflected in higher multiples. So if you look at like lithium companies, for example, you have these companies are trading at 20 to 30 times EBITDA. If you look at the copper companies, without that kind of rhetoric, without this emphasis on the importance of these companies and the metal that they're supplying, you need copper companies to quadruple before they get to those kind of multiples. So I mean, you'd be talking about Freeport trading at something like $160 a share, or $280 a share for Southern Copper, or $120 First Quantum shares. If you were to get the same sort of strategic kind of consideration and appreciation by the market. So we're not there yet. But I think as this cycle evolves, as we, so the supply deficit that we're talking about actually materializes and then widens, and you get a really dramatic price response, from the middle of this decade through the end of the decade, where we get well into not just record prices, but multiples to prior record prices, where we get to $6 to $8 copper and $8 plus dollar copper prices. That's when I think you can expect that copper will begin to be considered a strategic metal, and that'll have obviously really dramatic implications for the equities.
So in this vein of talking about basically politics combined with these strategic metals or minerals. How does the political environment in South America, one of the most important regions for copper production in the world, affect the stability of the output for those countries?
Oh, it's it's at the core of it. It's right at the heart of it. And it's not so much this again. We're not so much talking about the present day, because these mines are already built. In most cases, they're depreciated. They're going to continue operating. They've got huge margins at the moment. But what we're talking about is the medium term and then the longer term. Because when you raise the political risk level with geopolitical instability, then really what you're affecting are investment decisions that these companies are going to make. So with projects that they have in the pipeline, you're going to see them deferred or delayed and possibly even canceled if the situation doesn't improve. And so we've seen this recently in basically the two largest kind of copper producing jurisdictions in the world, Chile and Peru. So these are number one and two respectively. About 28% of the world's supply coming just from Chile. And what you've seen in the politics of Chile is a really dramatic shift to the left. Okay, and so you see this reflected in the results of the recent Constituent Assembly election in May, where you have now a majority on the left and the far left. You see this in the polling for the presidential election, which is going to take place in November alongside the congressional elections, where President Pinera, so the existing president, represents like a center-right coalition. He's polling at such a low level that he's announced he's not even going to run in that election. The leading presidential candidate in Chile, his name is Daniel Jadot. He's a self-avowed communist. He's promising much higher taxes and royalties on copper mining companies. Taxes in excess of 70% at spot copper prices at the moment. Government stakes in projects, so partial nationalizations, and a variety of other things that would be policy positions that would be negative for the copper industry. And so this has massive implications. I mean, if you look at the pipeline of Chile, you've got projects like Andina, Centinela, Collahuasi, Alabra, Los Bronces, a whole series of projects that would be threatened by this kind of a development were it actually to crystallize. In Peru, so this would be the world's number 2 producer, about 10% of supply. And in both of these countries, large shares of the future growth that is kind of anticipated out of the copper industry globally. You've got the same thing happening. So a shift to the left, a shift towards socialism, but on a different timeline. So you've got that country has actually just gone through their elections, and they've essentially elected Pedro Castillo. So there's still some dispute and over voting and so on, but they've all but declared that Pedro Castillo is going to be the president. And this is again a socialist. He's called for the same taxes on mining that have been proposed in Chile. Over 70% taxes on copper mining projects at current spot prices, and a whole bunch of other adverse regulatory policy positions that would affect the industry. I think that this, again, it doesn't affect the current level of production, but it absolutely delays future production. So I don't think you're going to see a single new project in the next 5 years, which is Pedro Castillo's term as president in Peru. I don't think you're going to see a single project come out of Peru across 5 years. So these are projects like Tia Maria, Michiquille, Los Chances, Hequira, Rio Blanco. These projects aren't going to happen. And order of magnitude, you're talking between these two countries, 3 million tons per annum of supply. Roughly equivalent to what all this electrification and green demand and so on, which investors focus on, roughly equivalent to that. On the supply side, which is going to be taken potentially is threatened by these developments and taken out of the market.
So if we contrast Peru and Chile with Ecuador, are they more of a leader in this space?
No, Ecuador is not a leader. Ecuador just recently opened up their country to mining, so it was basically off limits for commercial mining prior to 2014, where they made a strategic decision to open up this sector as a way to boost growth, generate foreign direct investment, eventually generate, kind of significant tax and royalty revenue from the sector and employment and all the rest of it. So that this is a country that has just, like Peru, has just gone through their election cycle. So it elected Guillermo Lasso as president. This is Guillermo Lasso is a conservative. He's a former banker. He has the types of positions that you would imagine a conservative to have. So, supports growth of the private sector, and so on. With respect to mining, he's stated that he wants to see the mining sector grow to become a major exporter along the lines of Chile and Peru. So clear-cut and unambiguous statement of intent. Grow the mining sector, grow it through foreign direct investment, grow it in a positive way through encouraging, returns in the sector through regulatory reform and, reduce taxes and so on. And so that basically represents a continuation of the policy that you had in place under, successive administrations since 2014. Okay, when they instituted that package of reforms to open up the sector by getting rid of prohibitive taxes that they had in place, reducing royalties, regulatory reform, and so on. And that works. The mining sector is looking for places to invest. So when you give it a positive, fiscal and regulatory regime to operate in, the mining sector flourishes where it's got the the geology to do so. So if you look at Ecuador today, there's 2 commercial mines that went into production just in the last 18 months. They're already, they generated over $800 million in mineral exports in the last year, over $400 million in corporate taxes. I mean, this is huge. This is like nearly a quarter of the corporate taxes generated in the country at large, just from 2 mines that opened up in the last 18 months, less than 6 years after the opening of the sector in the first place. So this is just a huge win, and it's an example of how you can work with foreign investors and the mining sector to deliver positive outcomes for your country.
So is that road likely to continue that positive view towards the mining industry?
Well, certainly under this president. I mean, he's very clearly stated that that he wants to see the sector grow to become a rival of Chile and Peru, the world's numbers 1 and 2 kind of copper producers. And that's certainly, what all of his policy positions would accomplish, is the further growth of this sector. I mean, this is a constitutional democracy, though. It's not an autocracy. So it's not like the president sets policy and then that's just what happens. He's got a Congress to work with. There's a constitutional and legal framework with the courts and so on, which he's got to kind of achieve these policy objectives with. But if you look at the opposition, there is opposition to mining in Ecuador, like there is in every country. But if you look at the share in Congress, the anti-mining opposition would be less than kind of 20%, which is what you would have in if you were to look at Canada. The environmentalist contingent in the country or the United States or what have you would be at a similar sort of level. So it's not going to inhibit policy, but it is, it certainly has the potential to generate noise, and investors that are unfamiliar with Latin American politics may be alarmed at it. But the strategic direction for the country is clear. It's embracing foreign investment. It's embracing the mining sector and the kind of benefits that it can bring. We talked about the taxes. We talked about the foreign investment. But it's the economic growth. It's the jobs. It's the infrastructure that it brings in. And it's about where it brings them in. So the beauty of the mining sector is it's bringing all this growth and development and job creation in remote parts of the country that have been left behind by traditional economic activities. In the case of Ecuador, most of the economic growth and opportunity in the country is along the coast, in the major cities and the kind of coastal exporting regions, whereas the mining sector is in the interior, which has been left behind.
So, as part of this favorable viewpoint towards the mining industry, how important is the idea of responsible mining and the ESG practices that these companies institute as part of their plan going forward?
Well, it's critical. It's critical for government to ensure that it maintains support for its policy objectives to grow this sector. I mean, they've got to, continually raise the standard on industry to maintain that political support within the population. So, if you look at the new president, for example, with his platform, he's talking about growing these sectors, but he's talking about doing it in an environmentally and socially responsible way. So it's critical that government makes that clear that they're keen on seeing growth in this sector, but it has to be at the highest possible standards of stewardship for the other stakeholders, the environment, and then the communities in which these projects are located. And then likewise, it's incumbent on industry to meet the government and overperform in that regard. And so this is a clear, the mining industry has very clearly, in the case of Western companies, so Australian, Canadian, English, American companies have very strongly embraced this, not just in response to kind of meet the demands of government, but to meet the demands of investors as well. It's it's absolutely essential. Like, projects in the mining industry, like the way that we used to, or the way that we always have looked at mining projects is basically, just a mineral deposit with infrastructure, some varying degree of, on a project by project basis of, kind of engineering and economics established for it. And certainly we're looking at the same things now in the current context, but we're also looking at social license. We're also looking at, kind of the ESG framework around this, and we're valuing all of those things on, on an equivalent basis. So this is just a new way of looking at mining projects in the industry.
Interesting. So I'd like to turn a little bit to asking you about who David Lowell was and why you have such respect for him.
Oh yeah, well yeah. I mean, no, David's just hugely important to this company and to me personally. I mean, he is the one who was responsible for the discovery of our flagship project, Warintza in Ecuador. So this was discovered. It was his top target as part of an Ecuador program in southeastern Ecuador that he had that went on to make other discoveries. But this was, kind of the key target. And so really what we're doing with Solaris is we're taking that discovery and then bringing it to its full fruition. So he's right at the center of the story of Solaris, but he's also at the center of the story of the copper industry and the history of this industry, because of the role that he played in kind of setting its direction. And this goes back to kind of 1970 or so, where he co-defined the porphyry copper deposit model. And this is, the direct application of that model is through successive iterations. So there's innovation along the way, but that led to, more than a dozen major discoveries, including the largest copper mine in the world, Escondido, which is, more than twice the size of the next largest copper mine. These were all discoveries by David Lowell through that definition of the porphyry copper model, and then, the innovation of that model and application of it in different exploration environments. So this porphyry copper model that David co-defined is responsible now for something like 2/3 of the world's copper reserves. So it's, he's right at the center of it, and he's basically, to speak in broader terms about David. I mean, this is someone who, with respect to the minerals industry, made more discoveries of greater consequence than anyone. So not just in copper, but in gold and in other minerals, he made something like 17 major discoveries. And he did that, so obviously it was innovation. So that the ingenuity of the porphyry copper model, and then innovating it and applying it in different ways. But also just the incredible determination that he had to make the next discovery and then the next discovery after that, and to stay committed to that across something like a 50-year career. So by the end of his career, which was the end of his life, I mean, this was a person who days before he passed away. He passed away last year. Days before he passed away, he was sending us ideas on future exploration targets that we could pursue. Okay, so by the end of his career, he had generated something like $1 billion in personal wealth, and by the end of his career, he had given away the vast bulk of that to people in the countries that made him successful. So giving money away to universities in Peru and charities in Peru and Chile and in the United States. So I think that just speaks to the person that he was. He's just an amazing, just an amazing person. And so now that he's passed away, it's incumbent on us to continue writing his history. So writing the final chapters of his history, both through Warintza, bringing that to its full fruition, making the additional discoveries that there are to be made, applying his ideas beyond Warintza to see where they can take us. These are all things that, that are our responsibility, given that, that David set us up to do this. And eventually my personal ambition would be that I could put kind of a final chapter or an epilogue in the autobiography of David Lowell. I mean, that would be an amazing personal accomplishment for me.
Yeah, that would be very interesting, Dan. We were saying at the top of the intro there that you're a director of the Augusta Group, and Solaris is part of the Augusta Group. So can you tell us what the Augusta Group is?
Yeah, the Augusta Group is basically a common management group, which has a specialization, obviously in the mining sector, but particularly in the niche of exploration and development companies in this sector. And our goal is to find world-class projects, surface the value from them, and then crystallize that value through exit transactions. And so if you look at our track record, it totals over $4.5 billion of exit transactions in the last decade. And it's with exactly this approach that we're applying here with Solaris to great effect.
So when you talk about an exit strategy, let's say, is that more of like an M&A strategy?
Absolutely.
or okay, so explain to us what you mean by that.
Exit transactions. So like if you look at when I was speaking about the track record, this would include companies like Ventana Gold, which we sold for $1.6 billion in cash in 2011. Augusta Resource Corp, we sold for $670 million in 2014. And then most recently, Arizona Mining, we sold for $2.1 billion in cash in 2018. So that's what I mean by exit transaction. But I suppose it could include, and we certainly would look at, not necessarily with this company, but just in a general sense, I'm speaking about, we'd certainly look at other opportunities to, crystallize value. Like, for example, we had a company called Newcastle Gold, and we ended up co-founding Equinox Gold through a three-way merger that involved that company. And Equinox Gold has gone on to tremendous success. It's something like, a $3.5 billion company in present day from that original, that co-founding in 2017.
Excellent, Dan. Is there anything else you'd like to share with our audience as we wrap up here?
No, I think that's I think that about covers it. I think it's important to just keep in mind the kind of the framework that this exists in. So we spoke about copper and the industry dynamics of the supply, demand, geopolitics and so on, and how they would affect copper. But just bear in mind the bigger picture. I mean, people talk about kind of a super cycle for commodities, which if you define that as just sort of above trend price growth for commodities as a whole, then yeah, I think you can make a case for that. It's obviously going to be uneven because you've got these different profiles across different commodities. But certainly we're going to have really rapid demand growth here, whereas we get to coordinated, synchronized global growth stimulated by all this incredible, fiscal, largesse in an accommodative policy environment. And then we've got constrained supply. So we've had tremendous underinvestment in the mining sector over the last 7 years or so. So we would have gone from something like $200 billion a year of investment in the last cycle to a quarter of that coming towards the beginning of this cycle. So tremendous underinvestment because of this, investor push for the return of capital, which is wonderful during, the trough of the cycle to keep share prices strong. But it doesn't make sense across the next cycle when you need to be bringing on supply, because of course this is a depleting business and you need to continually reinvest. So I think when you look at that contrast between the demand that we're going to have and then this inability of the supply side to kind of respond, you sort of see the makings of this super cycle here, uneven as it may be across different commodities. So I'll leave it with that. I think that pretty much captures it.
Yeah, it's going to be interesting to see how this all plays out, how supply, or let's say how short supply is going to fall and how high demand really gets, right?
Yeah, absolutely. Absolutely. Certainly. Yeah, all of those things, and then also, kind of global inflation and where that's going to go. There's been a lot of talk about kind of transitory inflation, but, all the estimates, and of course there is going to be a large part of the current inflation, like the record inflation, across the last, few decades that we're seeing at the moment. Of course, it's going to be transitory because we've got these COVID related effects of, supply chain disruption and, demand and supply demand mismatches and all the rest of it. But to what degree? How much is going to stick around, and then how is that going to intersect with some of these longer term, factors that we have, which are, I think, going to reverse, these kind of decades of disinflationary, kind of structural factors that we saw, like demographics and globalization and the impact of technology and internet and e-commerce and all these things on limiting inflation, now reversing as we've got this kind of like deglobalization surge. We've got the demographics working against us. We've got we've got these like structurally inflationary factors of ESG and decarbonization of industry and so on. So yeah, look, you've got very powerful forces that are intersecting at the moment for commodity investors, and it's going to be a very exciting cycle for us.
Absolutely. Dan, of course, you're available on Twitter at DanielEarle3 and solarisresources.com for any of our listeners that want more info. Anywhere else you'd like to point them to?
No, that's wonderful. That covers it.
Perfect, Dan. Thanks so much for your time today.
Thanks again.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.